Hey guys, so this is another quick ES video. In the last one, I was talking about weekly extensions, and I've done some more thinking about it, and I think I've learned something. So let me show you. I've been using TradingView for some different things, and first it's always bothered me that we had this really deep dip in right here. That could just be gamesmanship, or it could be a sign that really something else is trading. And so in TradingView, uh, it's similar to when you draw weekly channels on a linear chart. They're messy. They don't really work. But when you draw channels on a log chart, everything snaps into focus. And so TradingView has a feature that Thinkorswim does not, which is drawing fib levels based on log scale. And so I'm going to do that. And we were talking about the structure of what seems to be this big fifth wave here, and the structure we were looking at was this. And I was kind of debating whether this was the top of wave 3 or this is the top of wave 3. And I've settled on this one because you get this nice divergence here where the wave 3 internal is the most overbought, and then the wave 5 of wave 3 is less overbought, and so you get that divergence. So this is the anchor that I'm using. So it's a, snap it to that. It's a 2000 wave 3 high to a 2018 wave 3 high. And when I do that, it's remarkable what happens, I think. We trade a 38.2 retracement and then a 236 target. So we hit the target and then we trade the full retracement. There's a very tiny front run of the 50 here, and there's no dip in at all. And you could argue that last fall we had a reaction to the 236 target, and that this fall we're having a reaction to the 618 target, which was down at 43.41, and we've actually been above since July. And so this situation where you trade the target before the full retracement, I'm starting to think that that's another way of saying that you're having an expanded flat correction like this. So you have the anchor at the top of the wave, and then you start trading these fib levels both above and below it until you get the full retracement, and then it goes. So this is what I think I've learned. Maybe they're using on this, at least this largest time frame now, maybe they're using fib retracements, fib levels based on log scale. So if you draw it to this high, it still doesn't dip in. The issue with this is that it gives us a target way up at 54.65. I mean, it's not impossible that this is actually what's trading. I'm just a little bit skeptical that we could get up there. But I mean, this is worth keeping in the back of your mind. If we just keep going up and up, maybe this is a valid target. But for now, I'm keeping it anchored right here. And so remember this fractal, this expanding sideways, touching fib levels on either side, because we're going to see it again on the daily chart. We may be in one right now. And so, what I've done is I've drawn this 2018 highs to highs extension, and the log fib levels are different. So I've noted them on the Thinkorswim chart. And so actually I'm going to remove, this is the top of wave 3, I'm thinking, and I'm going to remove this one. They're close together anyway. And so this is 2018 highs to highs. And then if we draw 2020 highs to highs, these are the log scale fib levels that again I've noted right here. And it's simply important to note that the log scale retracement levels are deeper than the linear scale retracement levels. So on linear, it will look like they are dipping in or breaking when they're actually trading perfectly on log scale. So I just, there's something going on with these expanded fourth waves. And I wish I could ring up the boys at Goldman and ask them, hey, are your trading algorithms now using log scale fib levels? And they could say, yeah, they are. And I'd say, okay, thanks. But I mean, there's no way of knowing for sure except what we see on the charts. And these touches are making me think that this anchor is actually what traded. So if we, this on the left is the weekly, on the right is the daily. And last week we were talking about how this fifth wave here was going up in weekly extensions that started from this high at the latest and maybe even earlier. And the last in this series was drawn off of the top, off of the May high here. And I disregard the Sunday evening wick here, and I use this as the anchor. And we were saying that to keep the trend going, this highs to highs extension needed to hold. And that obviously broke. But this is what I'm thinking might be going on. And so, if I take a snapshot to annotate this, um, here's the pattern. Remember, this was the wave 3 high right here. And so we have an expanded flat correction. What I think, since May we might have is a 1, off the bottom, a 1, a 2, a 1, 2, 3, 4, a 3 in here, down to a 4, just like over here, and then possibly up to another 5. And so within this wave 3, we have 1, 2, 3, 4. There's a tiny bit of overlap here where we spike into the top of wave 1, but I think I'm okay with that. And then this is up to a 5 of 3. And then within this fourth wave, we have a little 1, 2, 3. So we'll call them, that's a 3 wave X, and then a 1, 2, 3 up into a 3 wave Y, and then a 1, 2, 3 down into a 3 wave. I'm not sure, actually, I think that's supposed to be WXY, but you get the point. And so the pattern is repeating, where off of the third wave, we have a fourth wave expanding correction. 3, 3, 3 so far. Which means, I hope that's clear, which means that back on the daily chart, we draw the fib extension not from highs, May highs to all-time highs, but we draw it to this little third wave high in here. And we do that, we see the same pattern. We trade to a 236 target, except the order is different. Then we trade a 38.2 retracement, then we go to a 618 target, and then we trade the full 618 retracement. So targets first, then the full retracement. And we dip in, and you could argue that we've already retested that. And now we're going up in what is potentially another fifth wave here. And fifth waves go straight up or down in extensions. That's what they do. And so, what this means is if this is another fifth wave, this would be a fifth wave of a fifth wave. These, the series of weekly extensions that we're still in is, possibly unbroken. So a fifth wave of a fifth wave of a fifth wave, this whole channel in blue, of a fifth wave. This whole purple channel is a big fifth wave. So this could be at least a fifth of a fifth of a fifth of a fifth. Up in extensions or not at all. And so, what is important to realize is that as drawn, this target is actually below the all-time high, the 618 target. And, failed fifth waves are a thing. So there's no guarantee that we're going to make new all time highs. If we did make a new high, it kind of bothers me that this most recent high, we burned through the RSI divergence here. This is the highest RSI reading we've had in this entire fifth wave. So if we make a marginal new high, that could possibly give us the bearish divergence that we're looking for. And so, this scenario is again short-term bullish. I mean, I suppose the fifth wave could subdivide again and maybe be even intermediate term bullish, but I'm not ready to say that yet. So we need to be watching extensions. And so is that everything I wanted to say about that? Yeah. So essentially, the daily chart has a fractal that looks very much like this fractal on the weekly chart. Possibly another fifth wave and more extensions. And so if we go to the hourly chart, I have just a few minutes left. Here's the hourly chart. And what bears wanted to see, I was thinking we had a wave one down, a flat wave two correction, and then this certainly seemed like a third wave. And it looked like we were getting an A, B, C correction. And A would equal C right here on this 100% line. And, if we draw a retracement of this wave, well, actually it dipped in, so disregard that. There's also the all the way halfway back that was right on top of that 100% A equals C correction. And also this line would have prevented wave 4 from overlapping with the bottom of a wave 1 here. But what bulls have done is they've pushed it into that zone, right? And so they've negated a lot of the energy in this pattern. The market could still sell off from here. The market can decide, oh, we don't care about overlap. What are you talking about, Elliott Wave, crazy person? And we still have only 3 waves up, right? They closed just below this high right here. But here's the scenario I'm thinking about for Sunday and for next week. The way we closed on Sunday makes me think that they're going to gap it up and over this high right here and basically run the stops of anyone who went out short on Friday, which would be a new high. And then during the Asian session, we could come down, if this is a channel developing, and touch the channel over here and run the stops of everyone who was long on Friday. So we run the stops north, we run the stops south, and that would give us an ABC, expanded flat correction. And then maybe in the European session, we get a fifth wave starting and we start going straight up in extensions. We gap up on Monday and we just go and go and go, and we'll see how far it takes us. That's what I'm thinking. That's the bullish scenario. The bearish scenario is we don't make a new high. This stays a 3 wave up corrective pattern. The market says overlap be damned, we're going down, and we go down again. But, again, this pattern really has my attention. And, if we go up in a fifth wave, stop me if I've said this already, but it would be a fifth wave of a fifth wave of a fifth wave of a fifth wave. So it's at least a 5 of a 5 of a 5 of a 5, which means it's bullish short term, but soon to be bearish on every other time frame. I think that's everything I wanted to say. That's certainly all I have time for. Thanks, guys.